In this video, we will analyze a few examples of how to enter positions using the combination HTF2 LTF1. First example. The first logical element we need is V1 inducement greater than V2 volume confirmation. In this situation, a one-day fractal low is formed on the chart, which can potentially be considered as variable 1. We don't know if there will be a liquidity raid at this fractal, but we see that after the price tested the rejection block also on the one-day time frame, selling volume entered the market, bringing the price to our area of interest. To receive variable 2, which is volume confirmation, and to meet all conditions on the HTF, we need to step one level lower in our time frame system. On the 4-hour chart, the price performs a liquidity raid at the fractal low and forms a bullish rejection block, which is the first indicator that buying volume has entered the market. Then, an order block and a fair value gap zone are formed. Any of these volume tools can be considered as variable number 2. Now the question arises, how can we identify from which area the price will react and continue to move upwards? The answer is simple. Any of these areas can give a reaction, and our task is not to guess but simply to react in context with what we have. Thus, we consider the fair value gap zone as V2 because it is the closest, and on smaller time frames, we search for the remaining variables. Now we move to the LTF part and look for V3 trigger greater than V4 entry. I've noticed that for many people the trigger remains unclear, and I would like to clarify this aspect now. The main function of the trigger is to provide liquidity in the market. I also call it liquidity injection. We use only two variables as triggers, the fractal point or the fair value gap. They need to be located either inside our area of interest or near it. Any trigger is validated by volume confirmation on a smaller time frame. Conversely, the trigger is invalidated if the price does not react and does not form volume confirmation. Thus, in our case, the 1-hour trigger is the fractal low, which also forms the 4-hour fair value gap zone. Our only task is to wait for a raid at the fractal, a test at the fair value gap, and volume confirmation to enter the position. If this does not happen, we do nothing. On the 15-minute chart, the price meets all these criteria and forms an order block zone from which we can freely enter the position. This is V4. The last step is to identify V5 trouble area, where we will set the take profit for the position. Switching to the 4-hour chart, we see that we are inside a bearish fair value gap and a bearish order block. In this case, it is best to ignore this position because we never know what volume might enter the market against us and where this volume might push the price. However, there are a few reasons why we might still open the position. The first reason is that our long combination has formed last, and the price has confirmed the volume through all three methods. The second reason is that the price needs to confirm the volume in short on the 1-hour time frame, which it has not yet done. Thus, no volume confirmation equal weakness. Therefore, the take profit for our position can be placed at the nearest fractal high on the 4-hour chart. We get a position with a risk-reward ratio of approximately 5.6. Second example. We repeat the same algorithm. On the one-day chart, we have a formed fractal low that can be considered as variable 1. We see that before reaching our fractal, the price tested a bearish fair value gap from which it received selling volume. We move to the 4-hour chart and see that the price confirmed the volume by forming a rejection block, which is valid even if the candle closed below the minimum of the fractal low. This will be variable 2. Next, we need to find V3, which is the trigger. On the 1-hour chart, a fractal low is formed that can provide liquidity in the market. The main condition is that the price needs to raid this fractal point and simultaneously test the rejection block. On the 15-minute chart, the price tests the trigger zone and our area of interest, then confirms the volume by forming an order block zone from which we can enter the position. This will be V4. We go back to the 4-hour chart to find variable 5, which will be the trouble area. The closest counter zone is a bearish FVG from which selling volume can enter. Thus, the take profit can be set there. However, the risk-reward ratio is not favorable for us. 1.5 is too low. We can solve this problem by moving the entry level a bit lower and getting a risk-reward ratio of around 2.0. Another option is to set the take profit a bit further. It all depends on the situation. Third example. On the one-day time frame, a fractal high is formed which can be considered as variable 1. On the 4-hour chart, the price performs a liquidity raid at this fractal and then confirms the volume in the form of a rejection block. This will be V2. Inside or near this area, a trigger must be formed in the form of an FVG, or again, a fractal. We move to the 1-hour chart and see that the only trigger is the fractal high, which we mark as V3, and which can provide liquidity in the market in the context of the 4-hour rejection block zone. On the 15-minute chart, the price performs a raid at the fractal and confirms the volume by two methods: the order block zone and the fair value gap, from which we can freely enter the position. This will be V4. The last step is to identify variable 5. We go back to the 4-hour chart and see that the closest area from where counter volume can enter is a bullish FVG. As in the previous example, the position does not suit us in terms of the risk-reward ratio, so we can set the entry level higher in this case, or take the profit a bit further. For example, the 0.5 level of this FVG might be suitable for us, giving us a position with approximately 2.5 risk-reward. Unfortunately, we didn't get the entry into the position, and the price moved without us. This can also happen. These were examples starting from the 1-day time frame and ending with 15 minutes. But if you try to find examples starting from 4 hours, you will see that the price forms this combo much more frequently. If this video was useful, don't forget to subscribe to the channel, like and leave a comment.